Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. What a day. The Fed hiked interest rates as expected, but the dollar went lower. Now, this did surprise us just a bit, and we are long-term bearish the dollar, but we did exude caution this week because we felt the Fed would come out more hawkish than expected. We've had a run of pretty decent data. I would go just shy of calling it robust, but solid ISM manufacturing, ISM non-manufacturing. We had CPI and PCE very stable against the Fed's target of 2%. The job report was great, but the wage growth just doesn't quite meet the expectations of what we need to see or what the Fed really wants to see. You got to hand it to Fed Chair Powell. He massaged that press conference very well. The dollar could have easily rallied, but he did deflect questions about rising inflation. He really pointed to the fact that none of their models point that inflation will get out of hand. And on top of that, last meeting, they said that they have symmetrical inflation targeting, meaning that they're willing to let inflation run high. All in all, I would go just short of calling it a dovish hike, but it was about as neutral as it could get. But the thing here to understand is it could have easily have gotten or been more of a hawkish hike if Powell did not have such a great press conference. Again, you got to hand it to the guy, and they are going to have a press conference going forward. And he's a very great communicator, and this is something that could really actually benefit the markets a bit. Upon those non-press conference or what were non-press conference meetings. So what are the levels? What are we seeing here? The dollar index bounced up to 94. This was just shy or just about halfway of its recent range from highs to lows over the past 2 weeks. To the downside, it finished in the red, finished on the lower end. Now this is actually a weak close here for the dollar index, failure at that halfway, and it really opens the door to go lower. This puts a lot of emphasis on tomorrow's ECB meeting. 6:45 a.m. Central Time is when they'll announce. Draghi, as always, his press conference at 7:30, and then he steps up to the plate. What does he do? They are expected to take a more hawkish turn and a more hawkish policy change, talking about tapering upon the QE ending later this year, September. This could really become a bullish move for the euro, especially after the dollar weakened today. And I bet a lot of traders here were a little worried about holding long dollar ahead of this meeting too. So at the same time, if they do not come out and change policy, that could really disappoint the euro, and you can see a little bit of a failure. Now, we expect a higher euro. It's battling back up to recent resistance, 118.35, 118.50 we've had. Now, that's not a major 3-star level of ours. We have major 3-star resistance higher, up near 120. That's going to be a key level, and that would break the recent downtrend to close above there. Watch for that tomorrow. You can start to see some momentum gather on a move above there. And the same thing with the dollar index. A move down below 93.20 again would really gather steam. The interesting part here is the dollar index would get down to below 93.20 before the euro gets above 120, and so they could feed off each other a bit. Watch for that. The yen, we'll touch on that real quick. It's been weak. It remains weak. Below that 200-day moving average, 91.60 area, we cannot find a reason to be a buyer. There's a long-term trend line going back to, I think it's 2015. That's a little bit lower. If it goes lower, this should present a tremendous buying opportunity. We talked about in the FX Rundown. Written part yesterday. The Aussie dollar, it's been a trade we like. We did exude caution this week, saying that if it did go below 75.80, it could stumble for a day or two. If it went below there on U.S. dollar strength, and that's what we saw today. Went down to about 75.30. We recovered back up to 75.70. That's a nice move. The U.S. dollar continues to weaken. The path for the Aussie dollar on itself, for reasons out of Australia, is bullish, as recent data has been good. The one thing you must look out for is recent tension with China, their number one trade partner. There's been some holdup on ports for wine delivery. Watch out for that. You don't want to see this get out of hand. And then lastly, the Canadian. We've talked about it. The downside seems limited, but there's some big levels below the market that we could argue to be a buyer, but there's nothing for us to get excited about to the upside in the Canadian. So tomorrow is the ECB meeting, 6:45 a.m. Central Time. Be ready for it. Volatility is going to start then or just before then. Give us a call. We're here to talk about all of it. 312-278-0500. Email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.